Hey guys, David Robinson here. Welcome to the apartment investing journey. Another great episode for you today. I've got a guest that I think will be able to share some insights with you that might be helpful to you in getting started in the multifamily space. And so I've got Bethany Smith with me today. Bethany, thank you for joining me. I appreciate you coming on.
Thank you for having me, David. I'm excited for our conversation.
So Bethany has a background in residential real estate sales, working as the director of operations for one of the top sales teams in Utah. She transitioned at the beginning of 2019 into multifamily investing full time, and she is acting asset manager on several communities in southern Arizona and is passionate about transforming troubled apartment complexes into safe, stable communities for tenants and their families. So, Bethany, I always say that's a very short bio, and our podcast is all about the journey. And so, we would love to back up and hear a little bit about your backstory and your experience before you got involved with real estate, and then this transition that you've been through, being in the residential space and the director of operations, and then transitioning into multifamily. So, if you can, let's back up and let's talk about that journey you've been on.
Sure, sure. Yeah, absolutely. I grew up in Idaho, in Boise, Idaho, went to Boise State for a couple years, go Broncos, and met my husband in high school, actually, and in a church youth group. And long story short, we got married. I dropped out of college a little early to marry him and moved to South Georgia. One kind of defining characteristic of my career background has been the fact that I was a military spouse. So it's kind of a unique dynamic for mil spouses, they call them, where you try to, find a career, especially this was 10, 12 years ago, trying to find a career that would accelerate with you and that would grow with you in different locations that you move in, oftentimes overseas. We never lived overseas, but I have a lot of friends that would get stationed overseas. It was just challenging. This was, pre-COVID, of course, kind of before work from home opportunities were cool. And so, or the mainstream even now, and so it took me a little while to find a career that I could, delve into and that would really grow through me through living in different locations. I worked in education for a little while as a tutor from home online. Eventually I found real estate and, it grew to be a strong passion of mine. I thought I may have wanted to be a realtor for a little while. So I kind of, checked out that option for a bit, but quickly determined that I wanted to work with a real estate team. And so we have that connection there in Utah, having been at the same brokerage for a little while together. But I worked for a real estate team in Utah for little over 3.5 years, and predominantly from home. So at first I was lived there locally, but then we moved again. So was able to continue that job working remotely. And one aspect of it that I really appreciated and enjoyed was we worked with a lot of investor clients that were buying like small multifamily homes. And I really liked their mentality. I really liked how they thought and how they were non-emotional about purchases. I saw the kind of cash flow they were making and that sort of thing. And so that really piqued my interest. And also, along with that, my husband and I had bought a how we had basically what's called house hacking. So we had bought our first investment property when we were first married, just a single family home that we lived in. We fixed it up. We had bought it as a foreclosure. We fixed it up and were able to rent it out. And then we had also acquired another property in Arkansas that we kind of did the same thing with. Had fixed it up and lived in it for a little while. So I house hacked that one as well. Ultimately turned it into a short-term rental property, and we still have that to this day. It's been a really great little property. So those two things kind of simultaneously, having that short-term rental and then working with these investor clients, I really piqued my interest into getting into multifamily real estate as another business. And so quit that job end of 2018 to delve into multifamily full time.
Cool. Well, that's a great little background, and hearing about the challenge of trying to find something that you could sink your teeth into and be excited about, but was also something that could adapt to your circumstance and the different locations that you were living, and with your husband's work taking you into different locations at different times in your life. I'm sure that was challenging, and it's cool that we were able to find real estate that could help you to do that for at least a short period of time. And then ultimately now, probably the same thing as we dive into real estate, we'll talk about how you're able to buy property that may not be, immediately in your local market. But
Mhm.
let's talk a little bit about that transition. So you mentioned, being able to work with investor-minded clients and clients that were actually buying small multifamily, and how that got you interested in being a part of the multifamily investing side versus just the, real estate services side of things. What was that transition period like for you, and what were the steps that you took to actually get involved in multifamily on the investing side rather than just the servicing side?
Yeah. As I mentioned, my husband and I had that short-term rental property that really piqued our interest strongly into getting into larger properties, because we saw the power of having multiple doors. Where our first investment we ever had, that single family home, when we were without a tenant, we were 100% vacant. That really hurt. You had to cover the mortgage payment for the month and the other expenses. Whereas with this other property, it functioned similar to a fourplex. It was still a single family home, but we could rent it out by the door. And so if we were 75% occupied, that's only 25% that's vacant. So it didn't hurt so much. We could still cover the mortgage payment and that sort of thing. So that had really piqued my interest into more doors is better type idea. And started reading books the end of 2018 on the multifamily investing topic, listened to a bunch of podcasts. My husband had been following Grant Cardone, who's love him or hate him. He's a little polarizing, but had been listening to his podcast and his material and things like that. We'd invested a little bit of money in Canovo Capital just to kind of get our feet wet with that. I really wanted to find, really key to me though, was finding a mentor. In my experience with, career professionally and just in life overall, I feel like having a mentor is such a lifestyle hack. You can kind of have that shortcut of learning and gleaning from their experience and the tough things that they've had to go through. And as long as you're coachable and teachable to kind of, learn from them and absorb that from them, it can be such a time saver for you and just, save you a lot of headaches. So I was really intentional about trying to find a mentor in the space as well. And just attending everything that I could that year. 2019, from the time I quit my job, so January 1, I'm starting with, kind of clean slate, delving into a new, career pursuit, basically. And I just wanted to attend everything I could, get around every type of learning activity. I went to every meetup I could find, listened to a bunch of podcasts, read books, just trying to learning by immersion. The more you're in something, whether it's learning a language or a new skill, the more you're just totally immersed in it. It can really help expedite that learning process. And so went to several masterminds and met my current business partner on Facebook, actually, in a Facebook group. And so that's worked out really well, and just really delved into, using the coaching, using all that, information that I was learning to just start taking action. I think, a lot of folks, if they start in a new topic or learning a new skill, we can all have analysis by paralysis and just overthinking. So that was, really important to me to just start taking action. It may not be the right action. I may fail a bunch, but it's super important to just start taking that action. And so ultimately we found our first deal by August of that year. So it took about 8 months.
That's great. And let's talk a little bit about finding that mentor. In my experience, having the chance to interview a lot of different multifamily investors, it's a common theme for those that are just getting started, that those that do find a mentor, whether that be pay to play or just by happenstance of networking and finding the right person, it has a significant impact on their growth trajectory and really shortens the curve for them. For you, what did that look like for you as far as finding a mentor? And did you go the route of enrolling in like a mentorship program, or did you find a mentor just sort of naturally in your efforts in networking? What did that look like for you?
Yeah, so I had invested into a coaching program about multifamily real estate investing and had a coach with that. But that coach was on the East Coast. I lived in California. And I really, while it was a great relationship, learned a lot from them. Foundationally, at the end of the day, I really wanted to find a partner and a mentor that would be in the subject market in which I was looking. So I live in California. I tried to narrow down the markets in which I was looking to for that are on kind of the West Coast side. Boise, Idaho, Salt Lake City, Phoenix and Tucson in Arizona, and then I think Vegas as well for a little bit. I quickly found out as too many markets to really delve into successfully at the beginning, starting out, and so I really focused more intentionally on Southern Arizona, and so making a connection that I knew was already investing in Southern Arizona. They had an asset there already. They were familiar with the market. They had some semblance of a team already created. They had property management in place where I could kind of just help support them in their goal. They had access to capital, they had the background experience, they had the team already pretty much put together. Their next goal was to find more deals. And from my background in residential real estate, where we used to find listings through direct mail, making cold calls, having building a referral network and that sort of thing. I translated a lot of those skills over to the multifamily side where I could, I've done this before. I've gotten a list from a title company and done cold calling, and we've sent out mailers and those sort of things. So I could apply those same skills over to the multifamily side. So that was something that came very naturally to me too, where I could be like, all right, I can help support you and help find a deal. And then we can take that one down together, see how it goes, and see if we want to continue this partnership. But it's, vetting people that you're looking to work with is so important, meeting other people that they know, going out and seeing, the assets that they currently own, how those are kept up, the types of parts of town that they're in. It's really important to do your due diligence, I think, on someone, just like it is a property.
Yeah,
So.
absolutely. And so when you mentioned, and it seemed like a pretty short timeline, right? When you sort of made that full commitment to get into real estate full time or multifamily full time, that was early 2019. Is that correct?
Yep.
Okay. And then by August of 2019, you had acquired your first deal. Let's talk a little bit about that first deal. How did you source it? How did you get involved? What was your role? Maybe just sort of break that down for us a little bit.
Yeah, absolutely. So this is in Southern Arizona, Tucson, to be specific. I had some familiarity with that market because my husband had been stationed there for a couple years. We never actually lived there. We actually lived in Utah. But believe it or not, he'd go down there for duty every month with the reserves. And I would go with him often. And I really liked the area. I love the market, I love the heat. When I met my now partner, who I learned already had an asset there and was expanding, to me, it was kind of like, oh, well, I like this. I like visiting this place anyway. I had actually gone out there for a air show. I volunteered at an air museum at the time as a gift shop, help run the gift shop. And we used to travel around to different air shows and have a pop-up booth and whatnot. And so one day I just said, hey, guys, I'm looking for real estate in this market. Can I use one of the government vehicles and go drive the area a little bit and go check out a couple properties? So I brought one of the guys that had come with me too to help a younger kid that just wanted to get away and get something to drink. So I brought him with me. It was big, like it was a 10 passenger van or 8 passenger van or something.
Oh, that's great.
Going to see this property and that I had seen. I forget how I had known about it. I forget where I had heard initially about. Actually, you know what? What I'd done is gotten a list from a title company and basically found the owner through, cleaning up that list. They call it skip tracing, where you're basically, finding the owner. You might have to look up the entity in which they own it and that sort of thing. But long story short, got his cell phone number, called him and asked him if he was interested in selling that property. At the time, he was like, yeah, actually, I'm thinking about it. You're welcome to come check it out, and I'll send my manager over there with you, and she can show you around. Okay, great. I'm trying not to act like too much of a rookie, rolling up in a government van, probably kind of weird. But met the manager, saw some units, had a short dialogue with the seller that we were too far apart on the pricing. And so it isn't going to work out. Plus the kid that I brought with me was a little creeped out by the area, said he saw some unusual, suspicious looking people. And he's like, I don't have a good feeling about this area, Bethany. I don't think you should buy anything here. I'm like, all right. So scratch that one off the list for now. a few months later, though, I followed up with that seller and asked him, hey, how did that property work out for you? Did you end up selling? And if so, for how much? I'm curious what you got for it. He's like, no, I'm actually I've not sold it, and I'm more amenable to negotiating a purchase price. Oh, okay, really? So long story short, we were able to bring him down, more in line with our pricing, and it worked out. But I remember calling him that second time and he was just pulling in his car. He's like, I got to get groceries out of my car. I don't know. Yeah, I think I'd sell it. Hang on.
Hmm.
Let me, let me put my groceries down. So yeah, so we were able to go under contract
Was
on that.
a couple questions about that. Number one, how much time went by between the first initial contact with him and when you followed up and actually were able to put a contract together?
I think I first spoke to him in March and saw the property in March. And then when I followed up with him, it was August. So
Okay.
what was that,
Yeah.
4 months, 4 or 5 months?
And was that the when you spoke with them the second time around, was that the first follow up, or was there sort of a systematized follow up process that you had in place to check back in with the owner?
I love to use a really basic CRM called Hubspot that just helps you log contacts. You can put their contact information. You can make little notes on their records, and then you can make a pop-up task that'll pop up. It'll send you an email. It'll send you a push notification on your phone if you want it to, just saying, hey, don't forget to do this follow-up task. And so I might have had a follow-up. I don't remember having a follow-up in between March and April with him. I may have, and he blew me off again or whatever.
Hmm.
But if he had, and every sales statistic out there pretty much says that it takes 8 to 10 contacts of follow-up before, a sale is done or contracts written up or those sort of things. So I knew that it was going to take a process. That's my mindset into any client relationship or seller relationship or broker relationship. It's going to be a process, and just stick with it. And people really value, relationships now more than ever, I think, are so valuable. And so just showing someone that you have that earnest interest in them and you're not willing to just be blown off and go away, but willing to follow up. So yeah, but I don't remember
Yeah.
having a specific one in between those.
Okay. Great. And just to give us some perspective, describe the asset for us.
36 unit C class. So has a common laundry facility. It's very efficient, and functional, but not a whole lot of bells and whistles. It had used to have a pool, but they had filled it in. Prior ownership had filled it in. Um, Gated community, but the gate was all torn up and messed up and piled in the corner. A lot of deferred maintenance, a lot of negligent management, and so a lot of opportunity for value add or improving the property, both on the tenant based side, just cleaning up leases, getting people out that really did not need to be living there, breaking the law, trading drugs or whatever. And then also fixing up the property itself. It was a really horrid shade of orange and turquoise and all faded and everything. And we were able to, paint it, of course, and fix up the laundry room, do some landscaping, fix the front gate, just put in new lighting, exterior, everything like that. And the most rewarding part of that for me, it really clicked a light bulb on for me in my head that what you're doing with that whole value add. Of course, it's you're making money through that process, of course, and everything. But it's the really fulfilling part of that for me is to see a community transformed. Like I had mentioned that kid that I brought with me to initially, go and see the property. He had kind of had the heebie-jeebies about the area. Well, enough time had transpired that the area changed a little bit, but really the problem was that property. It was a bad property on a good
Hmm.
block. It was a bad apple, and it was kind of corrupting the other apples in the bucket. And so cleaning up that property really helped that whole street improve, where we've had neighbors since, that own complexes and single family home neighbors reach out and just say, hey, thank you guys for what you've done. It's now, I don't feel weird walking by that property. The local police, installment there has had a lot less burden because they're not coming to visit the property 2 or 3 times a week for different things. And so you just kind of see the ripple effect of that improvement, affect the neighbors and the community at large. So that's really the fulfilling side of it that I really enjoy and I wasn't really anticipating.
Yeah, absolutely. So, how did you end up structuring the deal? You mentioned we, so I assume you had a partner or more. How
Mhm.
did you end up structuring the deal?
Myself and my partner and a couple other local partners here in the San Diego area, essentially. So it's called a joint venture or a JV, they call it a lot of times. And so it's a small group of people coming together to buy a property, essentially. So,
And did you get local bank debt? What kind of debt did you get on it?
yep, a local bank. Yep. And then we
Okay.
refinanced last year with a Freddie Mac product.
Okay, great. And I think you mentioned in our show prep notes, you bought this for 1.8 and refinanced in roughly 18 months at 2.8. So you're not going to complain about that. That's a big win. And
Mhm.
not to mention the fact that being able to really improve a community like that and have the positive feedback that you get from the tenants in the surrounding community is definitely a motivating factor and a big win for sure. So where did
And
things progress? Oh yeah, go ahead, please.
I was just going to say one other interesting aspect about that property I don't think I put on the show notes is that it's a LIHTC property. So it's
Mm,
basically a low income housing tax credit is what it stands for. And those properties, it's basically an act of Congress that puts a LURA into effect, or a land use restrictive agreement, that dictates how much of the property needs to be run in a certain way. So for this property, for example, they seem to all be different in some way, shape, or form. But this one had 3 years left on the LURA commitment, and 40% of the property has to be run as low income. So for another, now it's less time, it's another year and a half now, I guess. But having that stipulation in place, that this particular property was overseen by ADOH, or Arizona Department of Housing, that basically confirms whether the property is in compliance or not. It was
mm,
out of compliance at the time, and it was a lot of hoops to jump through to basically convince ADOH to let us buy it, because they weren't
mm.
going to allow a sale to transpire unless it got back into compliance. Well, we struggled quite a bit with the current management at the time to have them get the property in compliance, that ADOH was just like, fine, you guys take it, because you can't do any worse than these people are doing. Which kind of funny. But we were able to get back into compliance. But that's another aspect of property management that can be pretty challenging, that a lot of companies maybe don't have that bandwidth for. And so, yeah.
Just a follow-up question on that piece. Do those restrictions fall off? You mentioned a 3-year time period, and that was did those restrictions fall off? And is that a win for your asset for those restrictions to fall off, which would allow you to potentially increase rents beyond the control? Or did you want to keep the light tech in place?
Yeah, so every property is pretty different with what kind of Lura is on it. I've seen them as short as like 10 or 15 years, and as long as 50 years. So it really just depends on the property. And if you're looking at a property that has that kind of stipulation, you want to get a hard copy of the actual LURA agreement that was set in place, and not take anybody's word for it, but look at it, what was actually initiated at the time the LURA was, enacted, basically. So it's basically a tax credit program for the developer that built the property. And the tax credits for us, long gone. Property had sold like 5 or 6 times since it was built. But at the time it was built, they agreed to a 30-year LURA. So this property
Hmm.
had a LURA on it for 30 years, but it was at year 27 when we bought it. So it only had 3 more years left on it. And then at that time, when the LURA lifts, we cannot go in and kick everybody out.
Sure.
We cannot do that, nor do we want to. You have to honor all the current agreements that you have in place with tenants. But once let's say a low income tenant leaves, you can then fill it with a market rate unit.
Hmm.
So yes, that will bring up the rents that we're able to get for those particular units. It'll also allow us to probably go in and do another round of value add, depending on what the
Hmm.
neighborhood is like at the time. We don't want to go in and pimp
Sure.
out this place to be a Taj Mahal A class if it's in a C, B minus neighborhood. But if the neighborhood kind of merits it, it's in a really great growing part of town where the path of progression is coming through. And so, a lot of healthcare workers and those sort of things, professions that are looking to rent up there, we might go in and put in unit laundries, upgraded amenities and that sort of thing. But we'll just kind of see what the neighborhood feels like at the time.
Yeah, that makes a lot of sense. Thanks for going into that a little bit with us. So,
Yeah.
where did things progress from there? Your boots on the ground, just sort of hustling, happenstance. You're in the market there, random, in for a conference, and you end up taking the bus, the government official bus, to go and preview this property. You end up buying it. It ends up working out to be a great deal for you and your partners. Where did things go from there?
Yeah, so we were really focused on acquisitions for 2020, but then what happened in 2020? COVID. We were a little leery of buying much of anything in 2020, so wanted to just kind of focus on the asset that we had together, stabilize that, get the rents up where they should be, clean up the property, do all the capex that we wanted to do, or basically improvements on the property. So really didn't focus too much on acquisitions again until 2021. In the meantime, my husband and I had started a financial services, it's basically an education and marketing company together. And that was really basically, in our experience, anytime we look at, successful people that are buying a lot of real estate, they usually have a cash flow generating business with which to buy the real estate. So they have kind of all their money making over here. And then for tax purposes and just to have somewhere to put their money, they buy a lot of real estate. So we had seen that model kind of, over and over again. And I was never looking for, going from one job to another. I didn't want to have a job in real estate necessarily. I want to invest in real estate, have a foothold there, but not make it my full-time job.
Mm.
So we started this financial business together that stars aligned in a lot of ways. Really cool how that happened. We ended up working with another mentor who we've just admired for a long, long time, Ed Milet. And so it just worked out to kind of have a partnership with him and of sorts. And so we jumped at that opportunity, and I was helping my husband build that. And then 2021, I started to take a more active role into building up our relationships again in that market and try to find additional deals. The next deal that we found was actually a seller who I had spoken to in 2019. And he had told me at the time, I'm not interested in selling this property. It was a 52 unit property. I'm not interested in selling right now. If I were, you'd have to talk to my broker because I don't want to talk to anybody directly. Okay, that's fine. About a year later, I had followed up with him probably 3 or 4 times during the year, but a year later, I really aggressively went after him and his broker to try to get a conversation going. And I spoke to the seller again, talked to my broker, called the broker multiple times during a week, could not get him, called him, texted him multiple times, couldn't get him on the phone. Called the seller back, said, hey, I can't get your broker on the phone. Can you have him call me? Because I'd really like to have this conversation. And he's like, yeah, I can. So still didn't hear from him. I tried calling the office of the broker, spoke to the assistant and just said, I don't know, is he okay? I haven't heard from him. I really want to have a conversation. She's like, oh, I'll have him call you. He called me about 5 minutes later. And he's just like, yeah, here's a little bit about the deal. And he is interested in selling and this, that, and the other. So long story short, we were able to go under contract and close on that one of August last year. But it was a process. All in all, it took a year to follow up with that team,
And was it a marketed property? I mean, did the broker just sort of have it in his pocket and it wasn't being actively marketed, or was it being a fully marketed a deal?
No, it was off market. Yeah,
Oh, gotcha.
it was
Okay.
just a property that fit our criteria. So it was in the area we wanted, the age that we wanted, the size that we wanted. And so I was very intentional about trying to,
Yeah.
go after it. And so he had it, the seller wanted to bring his broker in to be the third party, to not have to deal, directly with
Mm,
negotiations. Totally fine.
sure.
He paid for it. He paid 4% to have that middleman basically.
Yeah.
And so the broker had done deals with him in the past and was like, oh, you want to sell this? Okay, well, I'll draft up all the paperwork and
Got
everything.
it. Yeah, that makes sense.
Yeah.
Well, congratulations on the 52 unit. And so you bought that in August of 2021. Is that correct? Great.
Yep. And then we have a 40 unit that was off market as well through a broker this time, just maintaining broker relationships.
In the Tucson market as well?
Yeah.
Great.
Yeah.
So did I get that right? So 3 total assets in the Tucson market, all in the Tucson market, correct?
Yep.
That's
Yep.
great. Good for
Yeah.
you guys.
Yeah.
So, what do you see on the horizon for you as we sort of wind down our conversation? What do you want your business to look like moving forward?
Yeah. So on the real estate side, our goal is 1,500 units in the next 3 years. It's an aggressive growth plan, but that's what we've mapped out and planned out. We implemented a business optimization program called EOS. It stands for Entrepreneur Operating System, because we're vertically integrated as well. We have our own management company. And so that's really been a game changer with that whole side of things too. Having your own management company can really help you save on expenses and optimize sources of income and that sort of thing, but it can be a lot of work. And so having EOS, starting to implement that has been really, really helpful, really helpful. And so it's kind of helped us formulate that vision, that growth plan. What do we want to
Yeah.
accomplish? How many units do we need to have, and everything like that. So
And do
that's
you plan on staying in the Tucson market? Are you expanding your market, your geographic location?
For this year, we are Southern Arizona has a lot of inventory. There's a lot of growth going on. It's pretty close to California, which of course there's a lot coming over for California, but just a good diversity in industry too. Got education, healthcare, border defense, all this kind of different stuff, which makes for a good diverse, market there. But yes, we'll probably next year look into, or the end of this year, look into other markets in the Southwest.
Got it.
So maybe Albuquerque, Greater Phoenix, that sort of thing.
Cool. Well, Bethany, this has been a great conversation. I appreciate you, sharing your journey, starting from, when you got into the real estate space, really as a way to sort of have a flexible job that you could work in different locations, and then how you really just sort of were attracted to the investing side of the business, and how working with those type of clients got you thinking about investing in real estate as well. How you bought the single family and house hacked and ultimately transitioned the property in Arkansas to a short-term rental, and then how that opened your mind to multifamily and buying larger properties, and how you've been, just one of those people that will just go out, have a goal, and go and attack it and figure out how to be resourceful, even going and finding these properties off market, acquiring three assets in a fairly short period of time, all in the same market. And it sounds like they were off market as well. So, what a great story and inspiring. I got a few final questions for you before we wind down here. The first is, what is the biggest challenge that you're facing right now in your business that we could all learn from?
Hmm. Um, I think it always comes down, every business is essentially some combination of systems and people. And so if you have, an imbalance on either side, maybe you don't have the right people, maybe your system needs to be, worked on a little bit and dialed in and everything like that. But it's kind of balance of that is what I'm finding really for any business out there. And so right now we're looking to bring on a couple key roles for our management company there in Arizona. And that's really kind of, our system is really refined and starting to get really dialed in, which is great. It just comes down to finding some, couple key people there. And you may have to go through several ones before you find a great one. We have a maintenance manager right now that probably took 4 or 5 different hires that didn't quite work out to find him. And so, it can be a little bit of a process there, but I would say that on that side for sure.
Yeah. What's something that you're just absolutely knocking out of the park right now in your business that we could learn from?
I would say just when I talk to people, I think the whole off market approach that I've used has been successful for me so far, and something that I've really enjoyed that most people struggle with, I think, at first. How do I start sourcing off market deals? How do I do follow up? I think that's one defining characteristic for myself, that I really enjoy follow up, and I don't feel necessarily I mean, at times I do, but predominantly don't really feel the awkwardness that can come from, hey, it's me again, but trying to find different reasons to reach out and be authentic about it, because people can sense that authenticity. And also another defining, or I think unusual aspect, is being a woman in this space and being a female that's making those calls, just because most apartment owners are men, a team of men. And then if they get a phone call from a lady, they're just like, well, this is different, so they're a little more, all right, what is this conversation going to be about? And then, women seem, to be pretty skilled at creating conversation and developing relationships. And so I really tried to come at it from the approach of, I'm a fellow owner in this market. You own property. Let's get together and exchange referrals, resources. Do you want to meet for coffee? Do you want to, what are you struggling with? How can we help you? We've given a lot of referrals and recommendations to different owners for painters, property managers, things like that. So trying to help develop that community feel, which also, translates to benefiting the community development office for the city and the police department and, the different programs that run the low income programs and those sort of things. And so, that's just one aspect I think that is I've tried to be really intentional about that I don't really see a whole lot of other operators doing.
Yeah, love that. Last question. What's the best way for our listeners to connect with you and learn more about what you have going on?
Yeah. So my husband and I call ourselves Your Cash Flow Couple. And we have a booking page that's to book a call, just a connect call. Love to, connect with folks. Maybe I can help, point them towards resources and just give them some of my experience, what worked and what didn't along the way. So that would be a great way to do that. Yourcashflowcouple.com.
Perfect. And we'll have a link to that in the show notes. So if you've enjoyed our conversation with Bethany and you want to connect with her, go down in the show notes right now, click on one of those links and connect with Bethany. Again, Bethany, thank you for coming on. Thank you for sharing your journey with us. And I look forward to connecting with you again soon.
Absolutely. Thank you, David. Appreciate your time.